in Stock Twits Nation. How is it April 21st? I don't know. Shy, how was your weekend? Did you watch some NBA finals? What'd you get into? Or sorry, playoffs.
I'm a little
Playoffs. Not the finals yet.
playoffs. Yeah, I'm a Clipper fan, so an OG one from the Maggette Mobley Cayman days. If you guys are aware, I think we got screwed out a bit. We should have won. We were up 15 at one point, and we just had I think it was like 19 turnovers that game. So like that's usually one of those self-inflicted games where you should have won, but you just turn the ball over way too much. Other than that,
Yeah.
Easter was yesterday, so I celebrated that with a lot of chocolates. Binge Black Mirror episode 1 of the new season. Just I'm still thinking about it. It's just one of those episodes.
Whoa.
Did you watch Black Mirror?
I've never seen Black Mirror.
You
I
are
don't know.
doing yourself a disservice.
I know. This is what I'm told. But it sticks with you, is what I'm told.
I'm shocked you haven't. It's such a like a cultural
I
phenomenon.
know. You know what's funny? There's a few things like that. Like I've never watched 1 second of a Mr. Beast video in my life.
Well,
I've
I wouldn't put that as like a cultural.
I
I've never
feel
done
like
that
that
either.
okay, because I feel like I'm like I don't get it. I've never seen it. Also, like Game of Thrones, I never saw. It
Whoa,
just yeah, I just
that's
like
an
miss.
interesting one.
But back to Easter. Do you do the Jelly Belly thing, or you think jelly beans are gross?
I love jelly beans. I there's this place near around my area, Swedish candy. It's like they do like pure. It's not pure. It's still unhealthy, but it's not like the fake stuff. So I got some of that, some gummies, and yeah, watched Black Mirror and had my mind just melt. And
Damn.
I have no kids around me in my ecosystem in LA,
Okay.
so like it feels weird to be aggressively celebrating Easter. I went to the Grove and there was a fat line for taking photo of the bunny, so I guess that's the closest thing I got to
Oh
one.
my god. Yeah, the bunny's a little scary. I love the buttered popcorn jelly bellies. I know it's disgusting to
Really?
most people. Like I will like pick only those out. But we got a lot to get into. Go Knicks though. I'll say that. It was 85 and sunny in New York on Saturday. And
Whoa.
the Knicks triumphed. And it's just the vibes are immaculate. And you're coming to New York next week. So hopefully they'll still be going. Um, Last week in the markets, short week, choppy week. Lots going on, a lot of earnings ahead. So just quick recap of last week. Tech got a breather from tariff exemptions, but Nvidia had the announcement of that $500 billion hit. Tuesday, of course, was tax day. We saw a death cross. Uh, Ackman's talking about taking a 4% stake in Hertz. We're a little in the red this morning, down a few hundred points last I checked. Yeah, Dow's down 335 points. S&P down about 1%, NASDAQ futures 1.43%, dollars falling. A lot's going on. We also had more drama at the Fed. So a lot of conversations around what's actually going to happen here. We discussed Thursday is when Trump started talking about wanting Powell out. A lot of back and forth since then. It's rattling the global markets, and that's what you're seeing in the dollar today. So it's falling sharply. Investors are worried about the Fed losing its independence. Why does that matter? Non-independent Fed really just shakes the trust in the U.S. financial stability. For context, I looked into other countries without an independent Fed. You got Russia, Venezuela, Turkey, Argentina, and Zimbabwe. Shai, do you think this is just fighting words, or is there actually a scenario in which Powell gets replaced? And if so, like, what do you think that impact's going to be on the markets?
Yeah, so I don't think he's going to get replaced. It would just be too disruptive, especially after everything that Trump's doing on the global trade. There's no way that he's going to get replaced. I think the fact that it's even on the table is somewhat alarming, and the perception that the U.S. might politicize monetary policy, even if it's in theory, is enough to distort capital flows in the future. So it would be detrimental to the stock market if Powell got replaced and essentially Trump, or we're going to start politicizing monetary policy. Like that's a no go. That is a clear line you cannot cross. But that's where we are right now. So like I do believe that it's more of the barks louder than the bites. However, you heard Powell last week even say plainly where the Fed can't really anchor towards anything right now because the pieces on the board are consistently moving. Like some of the quotes that he said are extreme uncertainty. It's going to potentially make likely move the Fed away from its goal from the balance of the year. Tariffs are larger even than our most aggressive estimates. Like this was a sign. I wrote a post over the weekend that I do think that Powell is just conceding to this high stakes poker game, and he's sitting on the sidelines. You can't like calibrate interest rates or any kind of fiscal policy when their environment is just constantly changing. Geopolitics is overriding any and every model out there, and you can't just simulate demand when the government itself is just so uncertain. So I think it would be really it would be not as bad as China invading Taiwan, but it would be such a black swan event if Powell got displaced due to some kind of political game.
Yeah, and Powell's in a sticky situation because, to your point, he's using choice words, choice language to indicate what he feels, but he's got to keep it in check. And I feel
Hmm.
like I don't know, I might be aging myself here, but like back in the day when I was like 11 years old, I'd go home from school and watch Maury Povich, and there's always like a fight going on, and one person's jawing. Eventually, the other person gets up off the chair, and all hell breaks loose. I don't think that's gonna happen, but at some point, if he thinks he's out anyway, does he just start going? So we'll see. I think a lot of the coverage I've been seeing, people still maintain that they don't think he's going to do it. But to your point, it's kind of a problem that it's even being thrown out there. But we'll see. All of this, of course, going down amid earnings season. So we've got Tesla, Google, Intel reporting. Curious, Shay, what do you think their results? How will they actually matter in a market that's being driven so heavily by the macro headlines, the tariffs, this drama at the Fed? Can those strong fundamentals still cut through, or are they going to be completely overtaken by some of this sideshow activity?
Well, first off, I want to talk about Netflix and how strong of an earnings they had, and how much of a fumble their PR team had on doing it on Thursday afternoon, and everyone forgot about that. So much news flow happens in a matter of days that Netflix earnings was just literally there hasn't been a full market day yet to reflect it, and you're seeing like, oh, it's like less weight and it should like right now that was an incredibly strong print. Netflix is only up 2% after
Yeah.
pre-market. We'll see what they do today at the open, but like I think this is a good not pre-read, but like a good sentiment read on like how minimal earnings season will be this cycle. It's going to be the risk and reward. It's going to be more towards the risk because the reward isn't being valued effectively in the market. Where like this was, you can't get better than what Netflix provided, up 2% after like it has been showing a lot of relative strength among the big tech names in the past like 6 weeks, 8 weeks from this correction, but like still like this should be a 5% move at a minimum, and we're not getting that, so it's tamed. The downside risk is significant, where you saw uh, I've I some blue chip company I'm not going to name, but blue chip company last week that just like dived
Yeah.
from a miss, and I do think like that's this earnings cycle. It's going to be somewhat polarizing on like we're gonna get some 20% moves on some high conviction stable names that you just never assumed that's going to be. But like for Tesla tomorrow, like we have a Tesla print earnings tomorrow, and it's going to be ugly. I think there's no shying away from that. Like I think you can't ignore the deliveries delivery misses. You can't ignore the trade war escalation, Europe fading. China is just absolutely wobbling at the demand for Tesla, and Musk is clearly taking a political detour in Doge, and he's alienating so many consumer bases that probably will never come back, even if they offer the free cars. Who knows what
Wait,
extent
what do you mean
that
free
pettiness
cars?
is. No, it's just it was like an exaggeration
Oh,
of
I'm
like
like, I wasn't on this email. I would actually take a free Cybertruck. I would do that.
I
Continue.
mean, it's just like no, but there's such an aura around owning anything Tesla, and if you're a very liberal town, like I live in LA, like it's looked upon like, oh, he drives a Tesla, or oh, like like there's stickers that say I bought this before Elon joined Doge. Like there's stickers out there that put on cars. It's a joke, but that even having to say that is crazy to me right now in this environment. But again, this earnings report tomorrow, it's not going to be, it's going to be ugly, but it's going to be based on the EV narrative. And we already know the EV narrative is faltering. And I think something else is taking shape, which is why I'm investing in Tesla, that it's not just a car company. It's trying to become the foundational infrastructure for a world that really doesn't exist yet. So that what that means is it's a story stock. And Elon tells a great story. Tesla tells a great story. And I think that they're going to tell a great story tomorrow. And the one thing I'm looking at specifically, what's Elon going to do with his Doge position in the near term? Because he needs to come back. You can't just like I know like everyone says like he can stretch really thin because he's like Starlink, SpaceX, Tesla, etc. Being in charge of a government position like Doge lead is something different than being a CEO of a private market. Like there's certain requirements you have to do if you're in a government role, and you can't just like, oh, like I don't want to do that. I'm not going to do that. You're forced to do that. Like that's just kind of the initiative they have in Doge. He needs to take the focus away. He did the damage already. I think he needs to take his seat off the table, rejoin Tesla, get that sentiment win, because Tesla is at such a polarizing point in their business right now, transitioning from EV to autonomy. That narrative change needs finessing, and you need Elon to be in that seat, finessing that narrative. And June is just around the corner. That's when the real FSD test or autonomy is going to take place in Austin. I think he has to dedicate his full resources towards that. So that's kind of what I'm looking for tomorrow. But headline numbers will be ugly. It's going to be ugly. But it's all about the narrative on the conference call and if Elon's going to be returning back to his full seat at Tesla.
Yeah, and it looks like stock to its community is 63% bearish. So with you on that, and sounds like you're taking in the numbers on the EV side, but you're looking at what signals ahead of that major June milestone will give you hope in that long-term story. And I agree that if Elon did want to set the stage for this future, he would make some bold announcements, some demos, some show and tell on the robotics front, and pair that maybe with an announcement that he's stepping back from Doge, which it seemed like that was happening. And then just this morning, I read that Secretary Bessent and Elon Musk are now in a tiff because Musk appointed someone to the IRS, which was not his job. That was Bessent's job. So then Bessent swiftly fired them. And so it's like he's still active. I feel like I hadn't heard him do much DC wise for a bit, but that just came out this morning. So yeah, it almost seems like if he came out and he was like, because there's like this special meeting after, right? There's something like after the earnings, there's like a special other thing.
Yeah, they're trying to distract the earnings with some like big announcements.
Okay.
Again,
So
controlling a narrative. It's all narrative, guys.
yeah. So I mean, if he comes out though and he's like, "Hey, robotics, I'm back full time," what? And if the EV numbers suck, what do you think happens to the stock after that?
Oh, it's gonna go up 10%. I think him solidifying that he's gonna be returning to Tesla full time is going to be a massive win. And also any kind of if you can provide any kind of rails on how FSD is going to do in the next 3 to 6 months, like specifics that can be tracked, that's another major win. But I think just him returning back to his previous role as Tesla lead, like that's going to be good enough to cause the stock to go up probably past 250. And we'll see from there. And the next catalyst will just be autonomy in Austin and how FSD does, because that's going to be a massive pilot program.
Yeah, as you were going over that, I was trying to look up on Polymarket what people are saying about him being out at Doge but then I came across a poll that 15% of people think he's out at Tesla this year, which that seems crazy. Like that, in that scenario seems like unimaginable for Tesla. Is someone
it would be under $100. It would be under $100 stock. Wow. It would be just, I would leave ASAP, sell everything.
Yeah. Well, speaking of under 100, Nvidia. I caught your tweet, dipping below 100. You have that they're still trying to navigate the news from last week. What do you make of that price? See if it's still there, because I don't know if you tweeted that earlier this morning. Let's see. Okay, they're back up over 100, 101.42. What do you make of that move?
Oh shit.
Shy, can you hear me?
Oh, I can hear you now. You're running low.
Okay.
Yeah, so it's still it's a 98 bucks pre-market right now. Guys, the Nvidia stock's not going anywhere anytime soon. They are being the world is weaponizing. We're in a compute cold war, is what I like to call it. And the US is weaponizing the kingpin or the bottleneck of compute, which is Nvidia, in order to punish the East. And now Nvidia is being used as a policy pawn in this game, and there's nothing they can do about it. And they're going to be, it's causing a black eye. That black eye is going to heal in the medium to long term, but in the near term, it's it's going to be visible, highly visible. And you're already seeing Nvidia pre-announce like a $5.5 billion hit due to essentially this conflict. So now we're going to price in this upcoming earnings cycle of like it's not going to be good. It's like there's going to be a lot of noise. So now that won't be the catalyst for the stock to buck its trend. And right now the trend for the stock is bearish. Just like a lot of the semiconductor chip names, a lot of the tech names, like it's bearish, that whole thematic, due to this East versus West. Nobody really knows the implications, how bad it's going to get. So they're pricing in the worst. Regardless, like it's going to be an anchor towards any earnings. We're going to start seeing earning revisions down on the downside, and also margins start compressing maybe. And it's like a really awful time to be in this tech space due to the fallout from this East versus West. And Nvidia is being used as the like bottleneck to is being used as the leverage on the US side. And you have to pick one side or other. And either way, like I know people are saying like, oh, 15% of Nvidia's revenue is China, so it shouldn't be too much of a hit. That's on paper. You guys know there's loopholes that are being had, and they're filling those loopholes right now to make sure they're plugging it in, so make sure it doesn't happen again. It's going to be closer to 20%, probably a little higher than that, to be honest. So it's going to be a big
Yeah.
headwind, and we'll see what happens. It's going to be ugly.
Yeah, I mean, I watch this, I'm probably oversimplifying, but at what point does assuming that Nvidia is being held as sort of like a bargaining chip for how long is to be determined, but in the meantime, losing ground. So, like, at some point, does this screw over US interests of dominating in AI when you're holding back key markets from Nvidia while Chinese rivals are stepping in? And I think that's the delicate balance. If it is used as leverage, sure, but like how long are these talks going to take?
Yeah, I mean, that's the opportunity cost is a real thing. It's absolutely real. You just don't know. Like for Snowflake, for example, like it was the whole 2024 year was used as an investment cycle year. Nobody really knew when margins were going to compress, but they eventually knew it was going to bottom out eventually because all that investment they were spending that year was going to start bearing fruit, and they're going to stop having to over acquire the compute necessary for their AI products. Nvidia, you just don't know. Like it feels like Trump and Z is just getting started. It feels like it's in the early innings. It feels more third inning than seventh inning of a baseball game. And because of that, we're in that middle part of this high stakes poker game. Nobody knows how long the middle part is, and it could prolong into if they're being hyper specific on just tech and less about the consumer goods tariff. I don't think we'll be in a recession. I think we'll be in a business recession. That's a different story than an actual economic recession. And that might be the middle ground on this whole conflict where like Trump will get penalized drastically from like the whole US hating him. But if it's just like hard stance on tech, that makes sense because AI is becoming a national security issue, and you kind of want Nvidia, like the Silicon King, to be under your umbrella instead of China creating these competing AI products on American silicon. Like you don't want that. That's like off-putting. That's like doesn't make sense on a national security front. So this could be a prolonged. It could be into 2026, to be honest. Like, and that's going to be uncomfortable as an Nvidia shareholder on if you should hold because you probably if you've held past couple of years, you've probably 5x your investment. So you have to ask yourself like, oh, it's a $3 trillion company. I 5x. When do I take the chips off the table and reallocate it elsewhere where it's not as noisy? That's a serious question that you might need to like start asking yourself and thinking it out because you may like the easy money on Nvidia has been made. I believe CUDA platform is cementing themselves to capitalize on so many different secular growth themes in the next decade. But it's not going to be 100% moves a year anymore. It's not going to be 50% moves anymore. It's going to be a gradual compounder. And they have so much cash that they're printing right now that they're going to be just fine. They have a massive cushion. They could probably start doing, if I was Jensen, if I was in the room with Jensen, I'd be like, all right, there's nothing you can do about this right now. Nothing. Spend some R&D, financial buybacks. Your stock is undervalued and cheap. Do the financial engineering game where like you're stuck in this box. Might as well make that box as clean as possible until someone opens the lid and you can fly again. That's what I think they should do by buybacks and just like you're probably going to start seeing that, to be honest. Like they're going to announce a massive stock buyback and it's going to buck the $5.5 billion hits and you're going to see it kind of net neutral, but the stock won't go anywhere. It's going to be stuck between 90 to 140 or 130 for like years. It might be a digestion period.
Yeah. Something you said, I want to double click business recession versus economic. Does that mean like a slowdown in like high level business, maybe stocks, but like the average everyday person doesn't feel it as much? Is that what you mean by that?
Yeah, so the second guessing that C-suite are doing from this tariff war is like they're gonna not be as aggressive on their capex spend that they initially thought because they don't want to overspend on something that won't get a reflection back because of macro noise. Um, so that's like there's gonna be somewhat of hiring freezes. There's gonna be somewhat of less initiative launches. There's gonna be less advertising spend to sell your product because like there's not gonna be that much consumer confidence to reflect your spend. SMBs are going to be a lot more protective on their capital because they don't have the financial cushion that the bigger companies have. Like there's so many different lanes where B2B, like businesses just won't be spending as aggressively as they thought they would. They're going to pull back and that slight pullback will be felt at the enterprise level, but consumers like they're going to still be chugging along if the consumer goods aren't increasing in price that drastically. That's the difference. Like 2023 was a massive tech recession, massive. Or 2022 was massive tech recession. You didn't feel too much on the consumer side or economic side. But if you were a tech investor, you felt like, whoa, this is a business recession we're in. I think we're about to be in a business recession in 2025. And you're going to see that reflected in the earnings.
Yeah, that's all interesting in light of a report that came out this week. They tabulated Trump's inaugural fund, how much was raised. It was $240 million. And of course, tech firms like Apple, Google, Meta, Nvidia, OpenAI, they each gave $1 million, as did JP Morgan, BlackRock, Goldman Sachs. So this is so interesting in the context of a lot of things going on right now. Nvidia, Meta's in court duking it out with the FTC. Google just lost at antitrust and they were declared a tech monopoly. Apple, under pressure. And so it's $1 million to these people is nothing to these organizations, but it is interesting. It's almost like, yeah, he kind of got what he needed and they're at his begging mercy. But like at the end of the day, sorry, sorry Meta, sorry Google.
Yeah, I mean, big tech's gonna be just fine, guys. Like, I think people are just like near default price action. They see the stock price and like, oh, things might be going poorly for the company. It's not. They're printing like 50 billion in cash a year. They're gonna be just fine. And to be honest, like big tech does somewhat welcome recessions in a way because there's a fire sale on assets that they can acquire that's going to be into their secular growth themes they're investing heavily in the next decade that they'll capitalize on. Like, I think the private market, if this lasts into 2026, the private market will be shots on a lot of companies that were just raising funds at such a high valuation that if you're in a private market, experiencing down rounds is fatal. Just fatal because it's all narrative in the private markets. It really is. And like a perfect example, it's Headspace. I think the company, my fiance brought it up to me yesterday. It was valued at $3 billion in 2021. There's a reason they're not public right now. They're never going to go back to even close to that valuation. Probably not even 1 billion. So how do you expect to go public in the stock market, a 400 to 500 million dollar market cap, when just a couple years ago you were valued at 3 billion? That's an awful narrative, and you can't just go public that way. I think that's what's going to happen in private markets, and you're going to see names, and that's why Wiz sold out potentially to Google
Mm.
at that stupid high valuation, which was a win-win. I love their product, and Google, great, hardening your infrastructure moats. But Wiz sold out because of that. I think they're seeing that the private markets are going to be choppy at best the next couple years. And yeah, it's a difficult time to be a private. You're having, you guys are having someone on Wednesday that's in the private markets that's showing like how bad the tariffs are hitting them. Like that's going to be a great sentiment read on like how the private SMBs are doing out there in the world. And it's not pretty.
Yeah, I didn't think about that of like potential future M&A and like yeah, corp dev teams right now might be shopping a bit or looking at least to see if they anticipate things are going to continue as is. Yeah, that makes complete sense. I want to quickly turn to earnings outlook for this week because we got a lot of logos to show you guys on the page, and maybe we can go day by day and kind of call out Shy, what you think's interesting. Things are really starting to heat up tomorrow. Today, we've got a few names in here reporting. Anything today you're watching, Shy? Or are you mostly looking forward at that Tesla and others?
Nothing today, but Tesla I'm watching for sure. I already called out why. I'm
Yeah.
watching Intuitive Surgical. I love ISRG. It's one of those like f- interesting angles towards robotic thematic. They do have some China exposure, so I'm actually going to be
Mm.
looking at that uh really in depth in that name. I love that name. It's just always been way too expensive for my taste. I'm like, I would be so happy if those are one. This is one of the names that goes down 20% from that somewhat of a headwind on China.
Hmm.
That's like the perfect example of like they have a defensible moat, a monopoly in an early sector growth theme, but they're experiencing that black eye from this high stakes poker game that's going to be short lived. By short lived, I mean it's not permanent. It's gonna resolve itself in some time. That's when I'm gonna capitalize on that big time. So that's one name. On Wednesday, ServiceNow. It's always the first. I call them the blue chip SaaS company because they are IT management. Like they're the golden
Yeah.
standard. And their CEO is just one of those most respected in that space. They're always the first in every cycle to report in growth SaaS. So I want to see business spending. That's my first tell on like what's a business spending like that's not outside the Mag 7 wall garden type of thing.
Yeah.
And then
They just acquired, I think, an AI company, someone a couple weeks ago, ServiceNow. They're kind of like a silent assassin because that's not a name a lot of people know. But you know, if you watch TV, they have commercials with Idris Elba in it. Like they got money.
oh,
And
they're
I think,
incredible.
yeah, I think they're in the maybe top 100, or they got listed somewhere. I'll look up what the acquisition was, but I think that one's interesting too. I got a chance to interview their CFO Gina last year, and like very impressed with them generally. So it'd be interesting to hear about that. What about the airline, Shy? You got
So
American. Are you sorry?
no, no. So before I get to the airlines from ServiceNow though, that's
Yeah.
another name like ISRG. Like I'd love to add, but there's some clear headwinds for them in near term. One,
Mm-hmm.
government was overspending on ServiceNow seats. They were. There were seats
Mm-hmm.
that weren't being used, and that's a seat. It's transitioning a little towards consumption now, but it's primarily a seat-based model. I think they're gonna have some immediate headwinds due to Doge. And I want to see if that's actually reflected into the numbers, or I'm just becoming fuddy. I'm just throwing FUD on it. And that's part B is they have to adjust in the agentic AI world. You can't be a seat-based model anymore. You can't just base it on licensing. You have to be based on consumption. And they need to make that transition, and I think they know that. Airlines, peop, I think airlines is a tricky one where consumers are still spending money on traveling and fleeing moments. Like Coachella, for example, was a 40% or 60% was buy now, pay later that went
Yeah.
into the event.
Yeah.
So like I do think that airlines is like they're it's a tightrope.
Yeah.
Maybe folks are pulling back, but I really haven't seen too much yet. But
Yeah.
I anecdotal bubble. Maybe I live in a bubble.
Yeah, I mean, let's turn to the markets real quick, but real quick on airlines is interesting, and I want to talk to you about later too. The American Express earnings, they did pretty well, and they're saying affluent Gen Z millennials are still spending on lifestyle, travel, dining, but they did notice a decline in the airline category, so that could potentially be a not so great signal for I think American, Alaska, some of these ones coming up. So that'll be something to watch. But let's turn to how we're looking as we open in the markets. The Dow's down about 290 points. S&P down 52 points, about 1%. NASDAQ also down 1.4%. The VIX, let's look at the VIX. The VIX is at, what is the VIX at? Okay, 32. So that's seemingly unchanged from what we were watching in the pre-market, right, Shy?
Yeah, it's digesting, I guess. It's not doing much. I will say there's a bid happening pre-market on growth. You're seeing Palantir green, Mercado Libre green, Tempest AI.
Hmm.
So it looks like a big tech thing. Let me see what Netflix is doing actually. Up 4%. So I'm glad that's getting reflected. I said that's a 5% move on a gap on this earnings. It was really strong. So nice to see them catching the bid that's deserved because you want to see that. If they were red after that print, I'm like, earnings season shots. There's
Yeah.
nothing going to change it. So that's nice to see.
What do you think? I mean, do you ascribe the Netflix? I mean, I guess it's now up closer to where you thought it would be, but is it more about the timing snafu of doing it before a long weekend, or is it the macro distraction for like the relatively muted response?
Well, it opened the door for the macro distraction because it didn't have its time in the sun on earnings.
Mm.
But I do think like that was just such a strong print. Like their EPS beat by almost 20%. Uh, they're they're making like 8 billion in free cash flow a year now, which is crazy for that business economics. Like there's all their competitors are not able to do that at all. So
Yeah.
they are just their pricing power was tested during the streaming wars, and now it's validated, and now they can lean into the operating leverage once you prove that you have a moat. So now they're gonna be more disciplined on content because the content spend they don't need to spend up the woo-ha on getting because they prove that they have a moat. They don't have to like overspend. So now that matters in today's environment when a lot of consumer facing businesses are kind of being vulnerable to tariff risk and supply chain volatility and shifting input costs. But like Netflix is remaining relatively insulated where it's a digital platform that has no physical inventory, no logistics footprint, and global pricing flexibility by, again, pricing power was being tested and now it's proven. So they're positioned really well in this macro uncertainty. And I wouldn't be surprised if they start being treated as a defense layer where like I can park my cash in Netflix and I won't be as worried of this
Mm.
macro mess. And that's why I was like, it deserves to have a bid after that print because there is a safety component to it now.
Yeah, and also interesting, they recently stopped reporting subscriber numbers, and I think that's partially because it's just not sustainable, but also they're emphasizing the ad-supported model. And they reported that ad-supported tier signups were 55% of new signups in all available markets. 43% of US signups were for that ad-supported model. So they're able to monetize in across different cohorts of consumers. You have maybe more affluent customers who will pay more to not watch the commercials, but then maybe they're getting new people who maybe are switching off cable or downgrading from something else. That actually shocked me because that was something to watch. Their whole business is built on kind of taking on the cable broadcast juggernauts. And as the narrative you've heard before, it's kind of like going full circle, right back to where we started. That's pretty good growth. So I think the one thing I was reading that analysts were saying to watch would be tariff impact on advertisers spending less on their ad-supported model, more than consumers cutting. So I agree. It could be, this is something that people just continue to spend on regardless, because end of the day, it's not that much money, and it's maybe people start to enjoy simpler things in life. Who knows?
Well, I think there's also what's not being discussed. What is why movie magic's a thing. There's escapism that's had with entertainment. So when there's more an increased anxiety in the world, uncertainty, like this is essentially that's today's reality. You adopt cheap escapisms to forget about it. That's Netflix. It's not that sorry, $15 a month isn't that expensive in my eyes for escapism. When you use it every day, you need to disconnect. You need to focus on your mental health by not being so fixated on all the world's anxiety. Like that is a cheap form of escapism when a movie ticket's more expensive than a 1 month subscription on Netflix. Like that's why it's got pricing power, especially in this kind of environment.
Yeah. We also have, so I think Thursday, Alphabet. What is that? Is that one you're keeping an eye on as well?
Yeah, I mean, Alphabet is just. I made a post over the weekend. It was like the most. Google might be one of the most disrespected stocks in the market because they're just consistently being bucketed under search monopoly will get eroded in an AI world we're about to enter. I agree. I don't use Google as much anymore. I use when I have a question, I use ChatGPT or Grok, etc. Like, I don't want to have to deal with like the effort of scrolling and trying to figure out the answer. I want it presented to me on a platter. But people are forgetting the infrastructure side, like the consumer side. Maybe that's going to be struggling from search, and also YouTube for the ad revenue might get impacted in a recessionary environment. But like their cons- their infrastructure side is definitely expanding. Like acquisition of Wiz is very real. They're strengthening their cybersecurity components. Google Cloud was one of the most impressive cloud numbers the past 2 cycles. They're really picking up steam in that space. And they're perfectly positioned in the agentic AI world we're about to enter because they have Chrome, they have Gmail, they have all these Google Docs. Like there's so many different levers that AI agents they can pull for AI agents. That's gonna simplify so many people's day-to-day operations. Like they're perfectly positioned for that. But people are just, oh, search. And I get it because that's the bread and butter. That's how much they're making all their profits on search.
Yeah.
But they're being traded at 14 times EV to EBITDA multiple is in a way violently offsides because they're just thinking about the headwinds and forgetting about the tailwinds. Nobody knows how one-to-one they are. That's where the disconnect is going to be. And if you're saying that tailwind, infrastructure, headwind, consumers, it will be 1-to-1, this will be a 2x. But if it's the infrastructure side isn't going to actually pick up that much steam on top line and bottom line margins, the stock would be dead in mud. But I think under 150 is so undervalued. So that's all I'm going to be looking for Thursday is ad spend and any commentary on search.
Yeah, and I think ad spend's about 3/4 of their revenue. Search is, I think, about half of that. They don't break it out, but they also have YouTube. There's something called display advertising that's not search. So they're trying to build up those other things within and diversify within advertising. What you're laying out, Shay, almost sounds like what you laid out with Tesla, though, where there's a heritage business that's still strong, but like there's concerns. And then there's a new business they need to prove. I wrote about it in my newsletter this weekend, which just one thing that's super interesting about, I mean, there's so many things to talk about on this end, but obviously Google has its own AI product, Gemini. But some of these other AI products are so much farther ahead of them. Last week, or maybe 2 weeks ago, Anthropic, Claude GPT released an update that allowed you to plug in Claude to all of your Google workspace logins and actually automate things from within. So the thing that building Gemini to do, other people are also building around. And yeah, there's a lot. I get nostalgic because I think Google is such a beautiful product, the search business. It's just like met such a need, it's so disruptive to advertising. But it does sound kind of like Tesla, where it's like if you look at the Google price now and you say that's undervalued, you're thinking of it in terms of the future potential and not continue on the trajectory of search, which, by the way, is now being called a monopoly, which is kind of savage timing, I think, amid all of this. You know, they're kind of like, hey, guys, like, but do you think it's a similar story to what you're laying out about Tesla?
I mean, it's different because Google is fundamentally undervalued, and Tesla does not have the fundamental backing on the narrative change. I'm banking that they're gonna have 50+% gross margins in the next like 4 to 5 years, Tesla, and that's drastically different than their 20% gross margin business right now that they have. But Google, like, it's nobody really knows like if that monopoly is going to go from 95% to 70%, and that delta of 25% reduction, how impactful that's going to be on the bottom line. There might be a digestion period now because of that, because margins will start compressing and the revenue won't reaccelerate the one to that margin compression, and it might be dead money because of that. I think people need to zoom out a bit on Google, and like it's done pretty well. But I mean, I use FinChat all the time, and one of the tools that they brought I saw was they're trading at the same EV to EBIT multiple as they did 10 years ago. What kind of business are they now than they were 10 years ago? I think they structurally are much better because of the infrastructure side of their business. But you might believe like, oh yeah, I mean, search is going to get killed, so it should be trading at where it was 10 years ago. I disagree. It's a new era we're in, and etc. But you won't see that result this year. You're gonna see it probably sometime next 2 years, and it's not just show up in one quarterly earnings. It's gonna show up when it snowballs momentum, two or three, done, done, done. It's like, oh wow, they're really picking up in agentic AI. So I don't know. That also another tricky thing is like I think there's a paralysis that's being had right now, and people aren't really testing new uh, innovations like AI agents. Like maybe people aren't willing to spend to figure out how to solve it because they're just in paralysis mode with this China East. Like that's the issue.
Yeah.
East versus West. Yeah.
I mean, my mind goes to as well, if like Google invented a new kind of marketing around its search product, I gotta believe they still have it in them to innovate around what advertising looks like in a AI era. Because currently, I mean, I've never seen an ad in a consumer-facing Gen AI tool. It's mostly subscription-based, but you could see where that goes over time. What does the ad-supported tier look like? How is that monetized? Google would seem to have the historical framework to be great at that. But I think it remains to be seen what the role of advertising within Gen AI is going to look like. And I think that's a big piece of the question too, of does all the money shift to other areas of their business, or do they try to shift their advertising revenue to make up for that search loss in Gen AI tools? So it's all up in the air, and they just took an L last week in court, kind of surprised a lot of people. But the DOJ is pursuing remedies that could force them to divest key assets like Chrome, potentially an Android operating system, and they're trying to dismantle this search monopoly that's essentially dying if you look at the early data. So this could be interesting for a few reasons. One, just the DOJ's appetite to break things up, and now you got Meta ongoing in their situation. They got to be looking over at Google and saying, "Oh, I don't want any part of that." So I think you mentioned, Shay, like if the Google news pans out, if they are broken up, other ad tech public companies, the trading desk, what's the impact on them? And are we seeing that already in the share price following yesterday's news or last week's news? Because I think I saw you tweeting
there's
about
going to be
it.
obviously an appeal process. Yeah, it's going to be a massive appeal process. You're not going to see any reflection in months. It's going to be years. But if this is structurally going to change things, like it's going to be substantial. Less on the demand side, which is what Trade Desk is, but it's more on like the sell side, like the Magnites. MGNI is one name to really watch out for this in the space where they're like the not sell side king, but like they are just like one of the main leaders in sell side of this whole outside of wall gardens approach. Netflix has a great partnership with them. Like if these auctions are going to become more fair, the sell side is going to substantially benefit from that. And this is one of those names where like it's very undervalued. Maybe this causes the market's a forward-looking mechanism, and maybe in 2 years we're going to start seeing some actual fundamentals flow through from this lawsuit ruling, and this stock will get re-rated because of that, because it's really undervalued. Where uh, let me see what their uh, not their PE because they're such a small company. Let me see what their valuation is on an EBIT multiple. They are trading at 7 times EV to EBITDA. So they are very undervalued and cheap. And they're supposed to be growing their top line. Wow. 12% CAGR on the top line with 34% EBITDA margins already. So imagine post ruling, if things start becoming more apples to apples leveled, they're going to see revenue acceleration on top of what I believe are really strong margins already. That's a great combination for a small cap stock that's only worth $1.6 billion. And that's where kind of multi baggers are formed, where it's undervalued, they're profitable, they have a great presence in the space. It's just they're in this box due to the wall gardens approach that looks like might be removing the barriers, and now it's floodgate of like open competition. That's where the re-rating happens, and that's how multi-baggers are formed. So like I started a Magnite position over the weekend in my small cap portfolio. Like I do believe this is a pretty major catalyst. I don't know when it's going to start, but I think it's structurally going to change things in this whole space.
Interesting. Didn't have them on my radar. Want to stay on tech, but turn to SPACs. There was a headline in TechCrunch last week that was "Return of the SPAC," which I obviously sang in my head because of the amazing song. Axios similarly reporting about a SPAC parade that's following Webull. We check in on Webull. That one continues to slide on down. Congrats if you got out at 79, because it's at 23 now. But
Jeez.
yeah, it's slip sliding away, as Paul Simon would say. But the TechCrunch article is saying basically, SPACs fell out of favor because a lot of them didn't have great performances. Some did, as you talked about, Shay, some of these space stocks. But they're getting renewed interest because of these IPO slowdowns. You got Klarna, others hitting pause. This is a different way out. One that's coming out that was just announced is this self-driving truck company called Kodiak Robotics. They announced plans to go public through a SPAC merger with Ares acquisition. So yeah, we had Webull and now Kodiak. We're going to watch those guys. Interesting just to see pressures in certain areas like the IPO space. Who's going to come out on the other side via SPAC, and how are they going to fare? Are we going to see more Webull-like situations? TBD. But SPACs in general, Shay, what would make you interested in considering a SPAC, if at all, as an investor?
At this stage, I would never touch a SPAC anymore. I just don't think there's so many great deals in the public market right now, from getting punished in the macro, they're getting punished for whatever reason that's short lived. They're getting punished. So like I rather take a risk on those companies than, I don't know, like SPACs to me, what I would get interested in if the market's at an all-time high, these multiples are expanding drastically on all my high conviction names or my portfolio holdings, that like they have to take a 50 to 60% hit for me to get really interested in these names. SPACs create maybe like, oh, there's some risk, obviously, because these names where they're going public via SPAC, they don't have the profitability or structure in place to go IPO, whatever it might be. There's a risk associated with really great tech and IP, and I love to capitalize on that. Right now, there's too good of deals on the public markets for me to participate. But for a SPAC, like if there was a SPAC, it'd be a company that's, I don't know, in space economy or quantum space that is just, people think their technology is too sci-fi, but really it's more of a near-term reality, and it's an interesting angle. So like it's a very early secular growth themes I like to invest in for SPACs that have great IP and tech that just don't have the partnerships in place, or fundamentals, and I'll treat it as a private equity round if I was a fund. But these SPACs we're getting, like, there's a reason that they're going public right now, especially in this macro via SPAC. The SPAC vehicle is because they're shitco's. A lot of them are shitco's, and they don't have a moat. They don't have they're just a commodity of a play. And Webull, like, that was that, especially at $70. Like, I think we were on the stream and I was like, that's crazy. It's worth that much. And it's squeezing right now. And the timing of them going SPAC on a Friday is very telling on how confident they are in their own company. Everything was there in writing for you guys to not buy the stock. And so hopefully you guys aren't down 70% into a week. But yeah, there's SPAC stench is real. And
Yeah.
I wouldn't touch any of them right now unless it's in the space or quantum arena.
Yeah, interesting that the company Kodiak's an EV trucking company, but the name's Kodiak Robotics. I wonder if we're gonna see. I feel like EV almost has this like ick factor lately because everyone's like, "Oh, EV." If
Totally.
people are gonna start using different nomenclature, sort of like we saw with like ESG, almost like not the same thing at all. But if I see Kodiak Robotics, I don't immediately jump to EV truck.
No, I mean,
So
it's mislabeling. That's
yes,
essentially what it is.
interesting comm strategy there. I'm popping in to see what's trending right now. Crypto, Bitcoin is up a bit following finally gold's pattern. So you're seeing strategy. And you're also seeing Coinbase up a bit today. So that was a move. Crypto's finally inching up a little bit. I think on this morning on CNBC, there was an analyst on there talking about how historically the patterns, crypto follows gold, but it's usually delayed but more dramatic in its rise. Although I don't know if we can compare anything to what we're seeing with gold right now. I think it hit its highest price ever today, and it's over $3,400. So you're seeing movement in the crypto companies. What else is we got here? Chipotle trending. I believe they're reporting later this week. That's an interesting one. The last earnings was when we first started hearing the rumblings of the tariffs, and they were really downplaying the impact on avocados. So we will see. We will see.
Avocado gay.
Yeah, avocado gate. So we'll see about that one. And then let's take one more look back at the markets for the day before we kind of outline the rest of the week. We are now we're down over 500 points in the Dow. So that escalated quickly. S&P down 1.5%, Nasdaq down almost 2%. Shy, that's significant since the last time we checked about 5 minutes ago.
Yeah, I mean, we're breaking down in the markets, guys. Like, even when we had that relief bounce, it was based on exactly that, a relief, like trying to find something to hold on to in this like downturn we had in the past month, and it was a dead cat bounce. Like, nothing has really changed, guys. Like, maybe we have a sandbox of risk we can function around within, but we're still below the 200-day moving averages, like by a mile. Like, we're nowhere close to being safe. And I think the uncertainty right now from consumers, enterprises, the market is at a COVID high. Nobody really knows what's going to happen, and that's being reflected in the print and the tape and the earnings reports we're going to see. So, like, I don't see any near-term callus on us bouncing unless there's a substantial deal from east versus west, like actual deal, like the rails of what the tariffs will be and then agreements, negotiation agreements. I just don't think we're anywhere close to that. So we're going to get probably new lows.
Yeah, I mean, it looks like as of right now, Trump's not focused on that. He just tweeted, it's one of those things where it's like, good for you. I'm not going to read that whole thing. But essentially, he's calling Powell a loser in definitive terms. So I don't know if that was directly what caused the downturn, but he's ramping it up now. This always happens towards the end of the show. Like, everything's going great. We got a plan, and so, yeah, he's bringing Biden back into it. This is like a classic one, though. He's hitting all the he's hitting all the marks on this one. So we'll see if that was a confluence of other things going on, and now it's okay. He's not backing off, but guys, you're gonna want to watch every day this week. We are on at 9 a.m. We're gonna have earnings coverage. We have some macro data dropping, and God knows what else will be happening in social media and in DC. So stick around. We will see you right back here tomorrow.